AI is managing trillions of dollars globally. In India alone, robo-advisors are managing $23 billion in 2025. So, the real question is, do you still need a human financial advisor or a robot is enough? Before you answer that, let me tell you something that will change how you think about this entire debate. Investors don't fail for lack of options. They fail because of wrong decisions at the wrong time. That one insight is the entire story of this video. Robo-advisors arrived with compelling promises that they are low-cost, automated, emotion-free, and no human bias. Just pure algorithm-driven investing. You just have to answer a few questions about your goal and risk tolerance, and the platform builds and manages your portfolio automatically. And the fees, it's a fraction of what a human advisor changes. Here are numbers that back its growth globally. Investments managed by robo-advisors have grown from $1.30 billion in 2017 to $16.51 billion in 2022 and are projected to reach $44.97 billion by 2026. In India, the users base is expected to more than double to 39 million users by 2026. For a first-time investor in their mid-20s with straightforward needs, a robo-advisor is genuinely a good place to start. It's accessible and affordable. Here is where the robo-advisors lack. This part is very important, so hear it carefully. Robo-advisors are built in one fundamental assumption that investors are rational. And decades of behavioral finance research tell us one thing very clearly: they are not. Here is the data that proves it. During the COVID crash of March 2020, the Nifty 50 fell 38% in just 40 days. In that same period, SIP discontinuation rate in India spiked significantly. Investors who had been consistently investing for years stopped. Not because their personal goal changed, not because their income stopped, but because fear overrode every rational decision they had ever made about long-term investing. And here is the irony. The investors who stayed investing through the crash and continued their SIPs saw their portfolios recover completely within 6 months. The ones who stopped logged in their real losses and missed the sharpest recovery in Indian market history. This is not a portfolio management failure, this is a behavior management failure. And behavioral management is something no algorithm has ever been able to solve. A Vanguard study, one of the most cited pieces of research in financial planning, quantified exactly what a human advisor adds. They found that advisor value adds approximately 3% net return annually. Not from better fund selection or market timing, but almost entirely from behavioral coaching, tax optimization, and discipline rebalancing. 3% annually, compounded over 20 years. On a rupee 50 lakh portfolio, that difference runs into crores. Now, let's talk about what a human financial advisor actually brings on the table, because most people get it wrong. A Vanguard study found that the primary value of a human advisor does not come from superior stock picking or outperforming the market. It comes from behavioral coaching and tax planning. Let me make you understand. The single biggest value a human advisor provides is stopping you from making a bad decision when your emotions take over. A human advisor understands your financial picture, your income, your debt, your family obligation, your tax situation, your life goal, your actual emotional capacity to handle a 30% market correction, not just what you said on a risk questionnaire. They sit with you when your father is ill and you are considering liquidating your portfolio to cover expenses. They help you restructure when your income doubles and you have no idea what to do next. They factor in that your parents are retiring, that you just had a child, that your business had a bad quarter, and they adjust the plan accordingly. These are not inputs that you can feed into an algorithm. These are not questionnaire answers. These are real financial lives, and you need real human judgments. Here is what most people get fundamentally wrong about this debate. They frame it as robo versus human, as if one must win and other must lose. But that is not the real battle. The real battle is between the investor and their own behavior. Markets do not test technology, they test discipline, they test patience. They test the investor's ability to stay the course when everything around them is screaming to run. A robo-advisor gives you a plan. It tells you exactly what to do. It executes with precision, speed, and consistency. But it cannot help you actually do it. It cannot account for sleepless night before a big redemption decision. It cannot understand the cultural weight of a family's financial obligation that changes everything overnight. And this is especially true in India. India's robo-advisory penetration is just 1.2% compared to a global average of 4.6%. And that gap exists not just because of awareness or access, just because Indian investors make deeply emotional, deeply cultural financial decisions that no algorithm has been designed to handle. So, what's the answer? Robo-advisor or human financial advisor? The honest answer is it is not a comparison, and it never was. The best financial outcome comes from combining the precision of technology with the judgment of human expertise. Robo-advisors are exceptional in what they do, from automation to consistency to low cost and to unbiased execution. For the mechanical part of investing, they are genuinely the best, and they're hard to beat. But wealth is not built by mechanics alone. Wealth is building across thousands of small decisions made over decades, in bull markets and bear markets, in good years and terrible ones, in moments of confidence and moments of fear. And what determines the outcome in those moments is not the algorithm, it is the investor. Their discipline, their patience, the ability to stay with a plan when everything around them is falling apart. Robo-advisors manage money. A financial advisor manages the investor. And in investing, managing the investor matters the most. If you find this video interesting, share your views with us in the comment section. Do like, share, and subscribe to Fincart. Bye.